Marcia.
Hey, Steve.
You know how GrowthForce helps you increase profits, improve cash flow, and reduce risk. Today we're going to talk about how we improve cash flow, specifically with our cash flow forecasting tool. So tell us, why do you need to have a cash flow forecast?
So I think the benefit of a cash flow forecasting tool is peace of mind and having an action plan to know when to spend your money. Gives you a visual representation as to where your cash is going to be on a week-to-week basis. It allows you to anticipate future problems, tells you when you can spend your money, and then it also allows you to have an action plan to go out and accelerate collections if needed. And then it also, another big thing is it gives them the confidence they need in order to make those big business decisions.
So why does that matter? What are they going to do? What are those decisions?
So decisions such as hiring new employees, increasing prices, and also paying down line of credits or paying down those big credit card payments.
So have you ever seen this with any of our clients? How has this impacted their lives?
Yes, so we've had a lot of clients come in where they go from week to week not knowing if they can make payroll. Having this cash flow forecast on a weekly basis allows them to stay ahead of the game so they can go out and factor their customer payments and or go out and borrow from their line of credit.
So if somebody doesn't have their fingers on the pulse of their forecast, it means that they're going to make decisions that could really hurt their business, like offering a 10% discount to get a deposit in, which creates cash flow problems in the end.
Right.
So we specialize in the QuickBooks ecosystem, right? We built this smart back office, and you're constantly looking for new web-based applications to synchronize automatically with QuickBooks. So you've got this, smart back office. Yet we built this cash flow forecasting tool in Excel, right? That's not reinventing the world of small business. Why did we choose Excel?
Well, we've actually gone out and tested some of the cash flow tools that are out there that synchronize with QuickBooks, and what we found is each business is unique. The way that they bill out their clients and forecast revenue is completely different. The way a service-based business brings in money versus a nonprofit is completely different. So it's important to have the flexibility that we need in Excel in order to forecast out, and our clients actually prefer Excel. They actually use Google Sheets as well, which allows us to collaborate back and forth on forecasting from week to week. It allows them to have the input into the cash flow forecasting tool.
Awesome. So our tool, what's different about it, right? Why wouldn't you just use Google Sheets or Excel on your own?
So we've actually automated the cash flow forecasting tool. It's very easy to use. It's got 3 different tabs. We've got a summary tab, an accounts receivable tab, and an accounts payable tab. All you have to do is get your AR and AP report out of QuickBooks into Excel and then push a button and it sucks in all that information. And then from there you just forecast out week by week on when you expect collections or when you're going to pay out those vendors. And then all of that information then synchronizes into that summary tab. And then you just plug in your beginning bank balance, hit the print button, and it comes out into a nice, neat, printed version and action plan for you to know exactly where you're going to be at the end of each week.
And because it's Excel, you can go in and add any other sources of funds or any uses of funds, and the Visual Basic programmer helps make it automatic. So you just go down and say, okay, here's my receivables. What week am I going to collect on this receivable? Week 1, week 3, week 5, and that all flows to one nice summary page.
Yes.
So that's it. It's that simple.
Yes.
And what does it mean? Now, somebody has at their fingertips a view into the future of, can you make payroll 6 weeks from now? Or do you have some extra cash that you can use to pay down interest rates or credit card bills at 22% interest and really help them make sure that they're managing their cash flow right?
Yes.
That's really exciting. How do they get it?
So all they have to do is click on the link after this video and it's a free download.
Perfect. Thanks, Marcia. This was fun.
Thanks, Steve.